So we may still have a few more people join us, but we will get started. Thank you so much for tuning into our national webinar to launch A Changing Workforce, 2 reports being published by the Insurance Institute today, now available. This is our official launch, and we're quite excited. With me today is Michael Burt from the Conference Board of Canada. Michael, say hello for the folks on the line.
Hello, everyone. Thank you for having me today.
Together, certainly the Conference Board of Canada has done the heavy lifting on all the research over the past year. And as the project coordinator for the Insurance Institute, really pleased to work with the Conference Board on this project and to produce these research reports. Today we're going to give a high-level presentation on some of the findings. The research was very extensive and also had multiple years since we have done this research in 2007 and 2012. So there is an awful lot of data. So we're going to give high-level findings today. We're going to give you an introduction and a background to set the stage for how this research came about and the reports that are being published. Then we're going to delve into kind of 4 key questions that the research helps answer. So the questions include, how have the demographics of the industry's workforce changed between 2007 and 2017? How have the demographic changes impacted the industry's workforce? Big considerations around technological disruption and the impact on industry professionals. And then we'll also take a look at what the research is telling us about how the industry can address the talent challenges identified. Okay. And then a little bit to end the session will be about how you can learn more about this insightful research. Okay. So we'll get started. Couple things, housekeeping. This webinar is being recorded, so you will receive a link of the recording and a copy of the slides afterwards. For you to review again or to share as you like. We will take questions at the end of the webinar. You have a question box or a chat box that you could type in your questions, and we will address them as best we can at the end of the presentation. And if your questions aren't dealt with live, then we certainly can contact you after the webinar to help address those questions. Okay? But hopefully we'll deal with quite a few of the questions through the presentation. Okay. So to get started, I'll talk for a few minutes about the Institute's role and how we've come about to be doing this research. So the Institute started to do demographic research studies in 2007, and we produced and did the first snapshot of the demographics of the industry in 2007, projecting retirements to 2017 at that time. We came back again in 2009 and did a little bit of an employee survey and a little bit more of census data and understanding the general workforce in Canada, as well as how our industry compared. And so that's the middle cover that you see there. And then we replicated the census and the HR survey and the employee survey in 2012 and had projections again on retirement to 2022 at that time. So in combination, we've been studying and developing a really good sense of the industry's demographics for the last decade. What we knew in 2007 when we released that research was that the workforce was aging, employees were retiring younger, and retirement projections would have a significant impact. And that was in 2007, and certainly we're going to still talk about all those same aspects. In 2009, we did our first employee survey and developed it as a resource guide to support organizations' recruitment and retention strategy. Because out of the 2007 study, we got a lot of questions of, okay, so now we understand what the issues are, now what do we do about that? So we wanted to help with that. When we replicated the census in 2012, we were really pleased to see that there had been substantial recruitment that had taken place in the industry. So employers had done really well, heeding the recommendations that had said We needed to recruit more and a useful workforce. Ideally, at that stage in 2012, what had happened was the level of recruitment had offset the level of retirements at that time. We didn't see the level of retirements at that time due to the economic downturn in that 2009-2010 period. But we, at that point, were projecting that future retirements would be substantial, and therefore, from 2012 on, recruitment and retention would be needed, absolutely, to increase the workforce and offset retirements at that time. So that's the series of demographic research reports that we've been producing since 2007. The parallel that I just wanted to introduce you to is that we've been doing a series of emerging issues research reports since 2015, and hopefully you may be familiar with our cyber risks, automated vehicles, and the sharing economy report. And so when we were looking at what would be the appropriate topic for a 2018 report, we figured that it made sense to couple both the demographics of the industry with an emerging issues research report. So we contracted with Conference Board of Canada to not only look at the demographics and the snapshot of where we are today in terms of demographics, but what I didn't want it was for our research on the demographics to suggest that with all of the retirement projections that we would be reporting on the need to increase underwriters or claims people or sales and service if in fact all the speculation in the industry was that machine learning and artificial intelligence and automating simple risks was actually going to have an impact on headcount. So the proposal was that we would do this emerging issues research report on a future forward perspective of what technology and all of what the emerging issues that we're all talking about would have on the workforce in Canada. And so I'm encouraging you to recognize that both of these reports are sister reports, and one gives you a snapshot and one gives you future forward, and you'll want to read both reports, okay? And as we go through this presentation, we'll kind of be presenting on demographics, but we'll also be alluding to some of the information that is talking about future forward, particularly when we're talking around in-demand skills and what the emerging issues research report on a changing workforce can tell you about what we can foresee happening in the future based on the technology and the emerging issues that all organizations are dealing with today. Okay. So a little bit of context in terms of what we did for this 2017-18 research. So to mirror what we had done previously, so we would have comparators from the 2007 to 2012 research. In this period, in 2017, we surveyed industry HR professionals. We wanted to get their perspectives on recruitment and retention, what's keeping them up at night, how concerned they are about technology and skill sets and occupations that they're trying to find to bring into their organizations. And we had 48 organizations, 48 HR representatives answer that survey. So that was really good and comparator to previous years. Then we replicated what we called the census. So we asked organizations to give us data on their current and their terminated or former employees. And we asked that data would be with no names, but it would indicate that there is in their organization a senior underwriter who's 42 and female and has worked for their organization for 10 years, for example. Or a 55-year-old male who has left due to retirement, for example. That would be part of the terminated data. So in total, we had over 43,000 records given to us and almost 25,000 records on terminated employees. We also asked the regulators in Ontario, Quebec, and Alberta to give us similar data, the demographic data that they had, on their licensees. So in Ontario, that would have been REBO, and that would have been for brokers. In Quebec and in Alberta, it would have been brokers, agents, and claims representatives. And so we had close to 50,000 records on licensees in those three provinces. Now, just a qualifier, those licensees may not be mutually exclusive of the employee data we had, but it was a really good validator for what the census data was telling us. And we could look at the data and see that we were seeing consistencies and could support, additional Quebec data, for example, through the regulator data. So all in all, that census data, even just for 2017, is incredibly solid and robust, given that we're looking at an industry that's 125,000 people. So close to half, certainly a third of that as part of our data set was really rewarding for Conference Board of Canada to have access to. The other thing to note is that we also had similar census data from 2012 and 2007. So the amount of data that Conference Board of Canada had to work with was substantial. And I'll just let Michael comment on that, because he was commenting that as an economist, it was exciting to have that much data available.
Yeah, so we've done what I would call labor market studies like this with a number of industries over the years, and I must say we've never had this degree of responsiveness, cooperation from the industry. The thousands of responses we had in the census allowed us to do a very deep dive in terms of what's going on with different occupations, with different types of organizations in your industry. So it was a very deep, very useful data set in terms of our work. And I'll also emphasize too, one of the other research instruments we use, the employee survey. I don't know if Margaret's going to talk about that in a second, but basically, more than 7,000 responses. Again, I've done dozens of surveys over the years with different organizations, and I can safely say we've never had such a high response rate. So again, I think this speaks to the interest in your industry and the high degree of cooperation with this exercise. It really speaks to the quality of the outputs that come out of it.
Thanks, Michael. And so, we are very thankful for all the organizations that participated. When we conducted engaged the industry in the employee survey, we asked organizations to send a survey link to their employees to participate, and we had 22 organizations agree to do that. And then we also pulled from the Institute's membership database, and so we removed those 22 organizations and then sent to our members as well as industry employees to contribute. So I think that the over 7,000 respondents was a really good outcome of that collaborative way in which we could get data on how employees feel about working in the industry and what their career prospects are. And so that's really rich data as well. And then to support the Emerging Issues Research Report on all that future forward and the impact of technology and the emerging issues, we wanted to get executives and senior leaders' perspectives on how quickly they feel these emerging issues are going to impact their organizations, what keeps them up at night. And so we sent out a survey to industry executives, both through HR to their organizations, as well as through people we could identify within our database, the Institute's database, as being executives and senior leaders. And we're really pleased as well with 230 respondents from 72 organizations. So again, really nice, rich data that is supporting the Emerging Issues Research Report there as well. Okay. So good solid data went into this in this 2017 study, and then supported by background information from previous studies. This is, in the 2017, the first year that we had surveyed executives and senior leaders for this purpose, so we were excited to get that kind of response. So big question, right off the top, is how have the demographics of the industry workforce changed in this decade? And so one of the biggest findings, and what, if you will, was going to be one of my biggest curiosities since I've had the fortunate opportunity to be project lead on all three of these studies, is I really wanted to see how well we had done with millennials, and it's certainly a big question in the industry. And in 2007, when you look and every other person was a boomer over 40, that was a concern, because in 2007 we were not in step with the general labor market. We were older than the general labor market. 12% millennials in the industry was a much smaller proportion of millennials than we wanted in the industry. By 2012, it did look like the industry had heeded our recommendations coming out of the research that said we need to be doing better at recruiting millennials, and we've got a big portion of the industry who are nearing retirement. So by 2012, with that 37%, 35%, and 27%, we were more in keeping with the general labor market in Canada, which was a much healthier place to be in 2012. And so then, knowing that organizations were recruiting, I was kind of curious about where we'd be in 2017. And it's really interesting to see that the millennial cohort now at 39% is the biggest cohort in the industry. So that, and the boomer cohort at 27% actually smaller. So what a big change from that 49% of boomers, every second person, to now every fourth person is a boomer. And the boomers now being 50 plus, certainly looking at retirement for sure. The retirement age in the decade has not changed much off of that median age of 60. The other interesting to note within this 2017 data is that 39% of millennials in the industry is a bigger proportion than even in the general labor market in Canada. And Michael, you've said that the kind of that proportion of boomers, Gen X, and millennials tends to be about a third each.
Yes, roughly speaking. So, basically, as just to reiterate what Margaret's already said, if you go back 10 years ago, the industry was older than average. The boomer share of the workforce was much above the average for the Canadian workforce as a whole. You flash forward to now, and you actually have the opposite situation where millennials actually have a much higher concentration in the property and casualty insurance industry than they do in the workforce as a whole. So this partly reflects the relatively young retirement age for the industry, where boomers are exiting perhaps more quickly the industry than they do the workforce as a whole. But it also does reflect the fact that the industry's been hiring literally tens of thousands of millennials over the last decade. And so we've seen a very significant shift in the age of the workforce over a relatively short period of time.
Okay. Kudos to the industry for hiring. Good.
So
go for it, Mike.
Okay, sure. So this is, I guess, a good segue into the conversation about the retirement story for the industry. If you go back 5-10 years ago, the previous research that was done, there was forecast for fairly high rates of retirement in the industry, and we do expect that will certainly continue over the next 5 to 10 years. What you're seeing here is the share of the current workforce that we expect to retire between now and 2027. So for the industry as a whole, it's a little over 25%, a little more than 1 in 4 workers. And those retirements will be very heavily concentrated in the next 5 years. So in the next 5 years, we expect to see about a little more than 3% of the workforce retire each year. But once you get beyond 2022, you start looking at that second part of that 10-year time horizon that will drop down to about an average of about 2.3% per year. So I guess the good news is the peak of retirements is pretty much here. There's going to be a fairly strong need for replacements of retirees going forward the next few years, but the pace of retirements are expected to slow down once you get into the next decade. The other thing I just wanted to highlight here is the retirement rates do vary actually quite a bit depending on what part of the industry you're talking about or what segment of the workforce you're talking about. So here we're highlighting some of the different segments that have very high retirement rates. So for example, crown corporations in the P&C industry, almost 40% of their workforce, their current workforce, is expected to retire over the next 10 years. That's quite a large transition. It's a little bit above average for mutual insurers as well. We also see this with rural workers, workers in the rural parts of the country. They will have a little bit higher than average retirement rates. Certain occupations, management and IT stand out in particular. IT is a very big one. We'll talk a little bit more about technology in a minute, but if you think about the technological needs, the transformations that are occurring in the industry, there's the need to keep the lights on, if you will, in terms of the existing IT infrastructure, legacy systems for the industry, but also a need to invest in new types of technology, adapt products, these sorts of things. And so there's going to be, you add that change in technology for the industry on top of the fact that there's going to be a high rate of retirement among existing IT workers, and that's going to be something to definitely keep an eye on. And of course, it also varies by province. Saskatchewan and BC have the highest rates of retirement going forward. We have seen a bit of an uptick in the average age of retirement for the industry over the last decade, but it's still quite low. And so it's actually close to what we see for the public sector, for government workers. If you compare the industry to other private employers, the average age of retirement is about 3 years lower in P&C insurance than it is for other types of private employers.
So because then of all this concern around mature workers retiring, one of the a demographic analysis that you can do is to take a look at how fast are people leaving and how quickly are you bringing people in. So you can do a entry to exit ratio. And when we look at, and Stats Canada does a entry to exit ratio that is based on those who are under 25 compared to the 55 plus. And when we were doing this research, we understood that under 25 wasn't a perfect measure. And so I asked Michael if he could assess what the median entry age is for new entrants into the industry, and it turns out to be 30. So the better ratio for entry to exit is looking at those under 30 compared to those 55 plus. And in 2007, for every 10 people who were eligible to retire, 55 and plus, we were recruiting 16 under 30 into the industry. Now in 2017, it's actually for every 10 people who are eligible to retire, we're bringing in 10 new entrants. So it's a ratio of 1 to 1. And while you might think that's ideal, I'll let Michael explain, but that might just be replacement as opposed to any growth potential.
Well, that's the key thing here is you're in a situation where you're working much harder just to maintain your existing workforce, to keep your existing skill set. If you actually want to grow your business, if you want to expand your capacity, your capabilities, it makes it doubly challenging in this environment. So essentially just the number of people leaving the industry, as I said a few minutes ago, is going to be quite high. It is quite high right now, and it's going to be quite high for a few more years. And so it's going to be an ongoing challenge to both replace those workers who are retiring and meet the needs where you have growing skill needs or growing capacity needs in your industry.
And then given the median age of around 41, 42, median age is 41 and a half for men, median age 42 for women, and the proportion of women in the industry at 62% female to 38% male, we're actually can say that, you know, in principle, the face of an insurance professional today is a 42-year-old woman. And when we look at the 3 most prominent roles in the industry, so underwriting, claims, broker, agent, it's actually higher than or about the 62 or higher % female, particularly in underwriting, almost like 72% of underwriters are female. And when we look at leadership in the industry, frontline, middle, and senior management, we can see that women play a big role in certainly front and middle management. At frontline management is 60% of those who are in frontline management are female, and 49% of those who are middle management are female. And so there's a little bit of some of the promotions that, you know, for example, Career Connections will use on campus when we're talking to post-secondary students and graduates about who typically works in insurance or what the face of insurance looks like. A 42-year-old woman who is a people manager in underwriting or claims is a surprise to them and an aha moment that it's not the 60-plus-year-old man that they, for some reason, still project on insurance. So we're quite excited about the capacity to be able to promote these kinds of myth-busting opportunities to those who might be interested in considering a career in insurance. Michael, do you have anything else to add?
Well, I was just going to say, one of the things that did stand out for me looking at the data here is that pretty much in every occupational group that you have inside your industry, women play a larger role in property and casualty insurance than they do in the workforce as a whole. A good example here we're showing you is management. So in 2017, little over half, 52% of managers in the industry were women, and that's actually up over the last 5 years or so. And so we've seen a growing role, or sorry, over the last 10 years or so, we've seen a growing role for women, particularly in the mid and senior level management positions. The industry compares quite well to the workforce as a whole. If you talk about the broad workforce, it's closer to a quarter of managers are women. But and the industry does compare favorably to other which you might consider more comparable industries, things like professional services, where a little over a third of managers are women, and financial services, broadly speaking, so including insurance, about half of managers are women. So all that to say, this does stand out that the industry's not only has an above average share, but that share is improving. That hasn't really been the case for the workforce as a whole over the last decade or so. So it really does speak to the important role that women play in the industry.
Great. Thanks, Michael. So those are kind of the high-level findings of how the demographics have changed in general over the decade. And then we've got Michael's going to talk to how these demographic changes have impacted roles and occupations and recruitment and retention within the industry. So I'm going to give Michael control of the keyboard and mouse, and he's going to take it away.
See if I've got this here. There we go. We're good. Thanks, Margaret. So, so we've already talked about this a little bit, but if you think about what's been going on with the demographic situation in the industry, and also some of these changes in skill requirements, the need to grow, for example, technological skill sets in your workforce, we see some interesting changes in terms of the recruitment and retention activities that the industry has been undertaking, and probably where it's going to have to go in the years to come. So broadly speaking, when we spoke with HR professionals through the survey and also through our steering committee and focus groups, we hear that it's becoming more challenging to undertake recruitment and retention. And so that's tied to a few things. Firstly, there is the situation where you have the high degree of retirement, but also there's still a need for organic growth. So in our executive survey, we asked, do you expect to see growth, organic growth in your workforce going forward? Because this was an open question for us when we started this exercise. And the truth of the matter is that the majority, 70% of industry executives, actually expect to see growth in both the workforce of their individual organizations and the workforce for the sector as a whole. So you are going to have to continue to expand the workforce as well as replace retiring workers. And on top of just broadly expanding the workforce, there's going to be this need to develop and acquire new skills. We saw this in a variety of ways, and I'll talk to this a little bit more in a minute, but broadly speaking, the industry is looking to grow skills in a variety of areas, including leadership and management and different skills related to IT. So there's a changing need around what types of workers you're hiring, as well as a broad need to grow the workforce. One of the things that was interesting is, of course, the industry can use targeted recruitment tools to try and find these people that they need. And we've actually seen pretty significant change in the role of targeted recruitment in the industry over just a short period of 5 years. So if you go back to 2012, targeted recruitment, the number one reason that organizations reported using it was to meet their overall staffing needs. Number two was bringing in specific skills. What we've seen here is a bit of a change. So number one now, which was actually ranked number 6 five years ago, it was meeting the needs of specific occupations. So organizations are now using targeted recruitment tools to meet, they need a particular skill set. They need a particular type of individual, particular type of job, occupation. And so they're now very much using targeted recruitment to do that, which wasn't the case necessarily 5 years ago. The other thing is the bringing new skills into the organization. That is still ranked number 2, so that's stayed the same. But there has been that fairly significant shift in terms of suddenly it's not so much about meeting overall staffing needs. It's more about meeting specific needs for particular specific occupations. So in addition to becoming more targeted, future recruitment and retention is also likely to become more fluid. If I wanted to express that in a different way, it basically means organizations are going to need to increasingly engage in continuous recruitment and retention going forward. You're going to have to anticipate what types of skills you're going to need, what types of labor shortages you might be experiencing going forward, and start thinking about recruitment in advance rather than just waiting for a vacancy to come up. We're going to have to be a little more proactive about what types of recruiting we're undertaking. It also means that you can potentially avoid prolonged periods of unfilled vacancies if you're really proactive about that, and you can be more engaged with tracking the talent pool that you have in your workforce in terms of what skills do we have, what skills do we need, where's that mismatch, and how do we address that mismatch. When we talk about retention, it's really around identifying and tracking the key factors that support retention, particularly among those key people that you want to keep. And probably a really good example of this is one of the things that came to light in the survey. We were looking through different degrees of satisfaction with different activities by occupation in the data. And so when we looked specifically at IT workers, one of the things that really stood out is they expressed a much higher degree of dissatisfaction with their training and development opportunities than other types of workers. And so that would suggest if you're really worried about retaining your IT workers, focusing on the training that they're undertaking or that they're experiencing may be one key way to differentiate yourself. IT workers really did stand out in a variety of ways in the data. For example, they're much more likely to leave the industry if they leave their current employer. About half of them would leave the P&C industry, broadly speaking. That's much less true when you look at other types of occupations that are more specific to P&C insurance. Other things of note, if you look at the data here, firstly, the bottom right, the chart here, this is showing you when you look at recruitment activity, how it breaks down in terms of filling current vacancies versus filling vacancies, so jobs where people left, versus filling new positions. And again, if you go back 5 years ago, it was more like a 2/3, 1/3 split. So about 1 out of every 3 jobs were filling new positions. Today, that's more like about 1 in 5. And that, I think, really does reflect this high need to replace retiring workers. And it also the other thing that really stands out, if you took a look at the top left corner here chart, is we're looking at the types of workers that the industry is recruiting. So we know that the existing workforce in the industry is quite heavily weighted towards full-time permanent positions, and so that's the yellow bar. More than 90% of workers, 9 out of 10 workers, are permanent full-time. But what's interesting is that the HR functions in different organizations are actually spending a disproportionate amount of their time recruiting for other types of positions. And so whether it's part-time, temporary jobs, contingent work, this all suggests that that activity, finding workers in those roles, are soaking up a disproportionate amount of time among HR departments in the industry. Now, probably the key reason for this is we expect that there's higher turnover for these particular job areas, but it's also something to keep in mind. So when we start talking about turnover, and what we see is that one of the potential reasons for the shift in recruitment towards filling existing vacant positions is increased turnover. So I talked a little bit about the need to replace retiring workers, which is certainly one of the factors contributing to the big increase in need or a shift towards replacing vacant positions rather than new positions. But the other thing to keep in mind is that turnover, we expect, has been increasing, and so that is likely contributing to it as well. Now, unfortunately, we can't track turnover over time for your industry, but I can say this. So if you look at the chart on the right here, basically what you do see is that your industry does generally have reasonably low turnover rates, which is good news. Obviously, you're doing a good job of keeping your employees happy. But we do know that the turnover rate for the economy as a whole has been rising over this period, and that's typical during a period of tightening labor markets. The unemployment rate in Canada right now is essentially at a record low, and so that means it's easier for people to get jobs, and they are choosing to move more frequently in that environment. So we expect a higher rate of turnover is contributing to that shift towards more recruitment activity being needed for replacing existing positions rather than finding people for new positions. The other thing I would point out is if you look at the far left chart, we're showing here the tenure, and we have seen a drop in the average tenure for the industry over the last 10 years or so. Now, this again is not that surprising when you think about what's been going on. Firstly, we're talking about an uptick in turnover, particularly I would say in the last 5 years, but also that high pace of retirement and high pace of hiring that's been going on over that period of time. It's probably not that surprising that tenure has ticked down, but it is something to keep an eye on in terms of, is this a concern for the industry? Is the industry, are individual organizations in the industry doing all they can to keep their key employees that they want to keep? So one of the things that we added to the new research this year compared to what was done in the previous rounds of this research was we did a deeper dive on occupations. So we looked at occupations in a lot more detail than we had previously. A good example of this is underwriters. So in previous research, we just had a category for underwriters. In this research, we looked at underwriters broken into 3 broad buckets: commercial, personal, and specialty. And this actually was really insightful because when we started asking about things like, how urgent is it for employers to recruit people in different types of positions, we started to get a much more nuanced story. In the underwriter example, specialty underwriters really stands out. They are they were the highest category, or occupational category, in terms of recruitment, both in the past and the future. They are also were flagged as a high risk for retention. Commercial, a little bit less. Now, they're still considered relatively urgent, but considerably less so than specialty. And then when you get to personal underwriters, it's a much less urgent situation. They were generally ranked in the bottom half of urgency when you look at different occupations, and so this detail provided us a lot more nuance about what was going on in the industry's workforce. In the case of personal, we suspect that what's going on here is that's the area where, you know, it's the highest volume business when you talk about underwriting. That's the area where automation is most likely taking place first, and so that's probably why you're seeing the least amount of pressure there in terms of urgency for recruitment and retention. We also broke out a couple of other occupations. IT is another good example. We had 3 broad categories there, including digital marketing, data analytics, and other IT. And again, this provided us some interesting insights because data analytics in particular really rose to the fore in terms of it's a key area where the industry is experiencing challenges around recruitment and retention. And then I'll just, of course, there are other occupations that have stayed consistent over the years from the different surveys, and actuaries is an occupation that has frequently been cited as urgent in terms of recruitment and retention, and it does still stand up high up in the rankings in terms of its need, the industry's need to recruit and retain actuaries. The other thing I'll just quickly point out here, I've actually broken this out. So these are the top 3 occupations for future recruitment by different types of organizations inside the P&C insurance industry. And it was actually quite interesting to me, anyways, maybe obvious to some of you, but the recruiting needs of the different types of organizations are actually considerably different. So, you know, underwriters show up as important for insurers, for broker represented insurers, but they're not necessarily as important for direct response insurers, for example. That was something that stood out. And so the depth of the data that we had, so when we talked earlier about the high number of responses and participation we had in the research, allowed us to get into some more nuances like this in terms of what was going on with different segments of the industry.
Okay, so the big question is, how much will technological disruption impact the industry's workforce, and what's changing there? So we did ask quite a few questions, particularly of the executives, about technological impact.
Mm-hmm. Yeah, and it's obviously that was a key focus of the Emerging Issues report this year, was around how technology is going to impact the workforce going forward. And I mean, broadly speaking, probably not a big surprise. We do expect to see technology has already been playing a growing role in terms of the skills needs and the recruiting needs of the industry, but we do expect that to persist and grow even further going forward. So, for example, this is from the HR survey, and we asked basically to what extent do these following trends impact your organization's recruitment and retention of employees? And what you can see is, at the top here are several things that are related to technology. So number 2, impact of technology on skill requirements. Number 3, impact of technology on job types and functions. And you can see that the blue bar is what it was in the past, and the yellow bar is what expectations are in the future. So it was a top issue already, and it is expected to become an even more important issue going forward. Internal reorganization, which was a bigger issue a few years ago, is becoming less important, although it's still significant. The other thing I would point out here is number 1 on this list is increased competition for talent with other organizations. That, I think, is at least partly also related to the issue around technology. As I alluded to earlier, technology workers are much more likely to leave the industry than, say, an underwriter. And so I think this tension or this concern around competition for talent with other industries is a critical factor for technology in terms of, you as an industry, you are increasingly having to compete with not just other insurers to find the talent and the workers that you need, but you're now having to compete with fintech and with Google's and all these other types of IT type organizations out there that, frankly, almost every organization needs these talents. And so I think that's a big part of why we're seeing that pop up as a critical challenge going forward as well. You can also see IT pop up when you look at the in-demand skills and capabilities in terms of future recruitment. So we've kind of profiled the top three here. This again is from the HR survey. But if you think about it, this was the question, over the next 5 years, how important are the following skills and capabilities relative to others for your organization? And we would argue that 3 of the top 4 are related in some way to technology. So if you look at it, the top one is analytics and data analysis. I mean, to some extent, that's obvious that is tied to the IT story. But basically, organizations in your industry are looking to increase their ability to collect, interpret, monetize data, and really develop that as a competitive advantage for themselves. And so that's really about that. Customer service. This is really about, again, that value proposition. So making customers central to what you do, making sure that you're able to serve customers in the way that they want. We talk a lot here at the conference board about the Amazon effect. And so basically, you may not be competing directly with Amazon, but Amazon has trained consumers to expect certain things from online service providers, right? In terms of speed of turnaround, in terms of breadth of offerings, in terms of the information that you provide, those sorts of things. And so that does show up in your industry, and that's why we think customer service will be part of this technological change in terms of meeting the needs of your customers and changing how you communicate with your customers to meet those needs. And then finally, the other one I would point out here is management leadership skills. Of course, management leadership always important for the industry, but we do think what we heard based on the different feedback tools that we had from this research that the skills needs from management is changing going forward. Leaders are going to need to think about new ways of doing things. They're going to need to think about how technology impacts your business. They're going to need to make some strategic decisions about how you make use of information, about how you price risk, these sorts of things. And so ultimately, if you think about the importance of culture in an organization, leaders play a big role in setting that tone, and so they have to exhibit this flexibility of thinking, this adaptability with regards to how technology will impact your industry going forward. It's also interesting to note that the in-demand skills are not consistent when you look across organizations. So this is similar to what I was showing you before about in-demand occupations. Now I'm showing you in-demand skills and capabilities rather than occupations. And again, there's significant differences across the different groups. I would say no two types of organizations really value the same skill set. So, for example, broker represented insurers, big 3 are analytics and data, business development, customer service. Independent brokers, they're more about business development, building industry-specific knowledge and problem solving. So, a completely different set of top 3 issues. So this again speaks to, there's the broad industry perspective in terms of what different employers need, but depending on what part of the industry you're in or what segment of the industry you're in, you may have very different skill sets, very different skill set needs going forward.
And then, so part of the next big question is so in identifying some of those gaps and some of those concerns and those talent challenges, what does the research tell us about how the industry can address these challenges? And so we did learn some nice attributes of the industry, particularly from the employee survey.
Mm-hmm. So one of the things that really stood out to us is very clearly the industry has been responding to an increased demand for flexible work arrangements. If you go back 10 years ago, it was much less prevalent, and workers were more likely to be concerned about work-life balance issues. That's less true today than it was. So certainly the industry's made some significant progress in terms of flexible work arrangements and improving work-life balance for employees. Just to give you some quick statistics, the recent census suggests that 95% of insurance organizations now allow at least some of their people to work remotely, which is quite high. This is well above what we, the Conference Board, we've done some survey work on this more broadly, and it's closer to half when you talk about employers as a whole. So your industry is quite progressive when you talk about that. One of the things that did stand out to us, though, is if you look at what types of workers want those types of flexible work arrangements, it's most important for young people. Surveys consistently show that millennials have higher expectations around flexible work arrangements than older workers do. And yet, when we look at your industry, the prevalence of availability for remote work is much higher for the older workers than it is for younger workers. And that may be because of the types of work that the different groups, the different age cohorts are doing. So maybe that younger workers are in more entry-level roles that require more direct supervision, for example. It may also be around the fact that it's considered a perk from your more senior staff. I mean, you've been a 20-year employee. We really like you. We're giving you remote work or flexible work arrangements as a perk to reward you for your long service or for your excellent work. There's nothing necessarily wrong with that and providing that for your long-standing workers, your long-tenured workers. But again, if you're really focused on retaining those younger workers, you may want to think about other ways to address the work-life balance needs that they have been expressing. The other thing I would point out here is just a few other things. Firstly, retirements. We've talked a lot about the high rate of retirement for the industry. The industry could probably do more to make it easier for people to transition into retirement. I know that defined benefit pension plans are common in the industry, and that creates challenges around double dipping with pensions. But the truth of the matter is, although the majority of people who are retiring want to work after they retire, and it's usually for lifestyle reasons, the majority of them do not have options to work for their current employer on a part-time basis or on a phased basis when they get to retirement age. So this is something that the industry could potentially do to help slow down or mitigate the impacts of high rates of retirement over the next few years. So anyway, all to say, I think the industry has made some significant strides in terms of flexible workplace solutions, but there still may be some room for changes going forward. The other thing I would quickly highlight is we asked in our employee survey a variety of questions around employee satisfaction, employee engagement, and broadly speaking, I'd say you have a quite highly engaged workforce, quite a happy workforce. When we look at what it is that's keeping people happy, what they like about the industry, number one thing was around good healthcare and other benefits. Flexible work arrangements was number two. So again, speaking to what I was just saying about the importance of that in terms of what people value in their work, good pensions. So these are sort of the key table stakes, if you will, in terms of what employees expect as working in the P&C insurance industry. You also see, if you think about it, like what are the things that make people happy in terms of their opportunities they're experiencing at work. We asked a variety of questions about that. So 80% of employees said that they get a chance to have excellent or good opportunities to work with respected colleagues. So clearly people are generally happy with who they're working with. They generally have good positive feelings about the training, education opportunities they have, and the ability to acquire new knowledge or expertise. So these are all, again, factors that your employees are happy with, that are keeping them engaged. And then on the engagement score, there's 5 questions here listed at the bottom that are related to engagement in terms of, how strongly do they agree with these statements? I contribute to my company's success. It's astounding that almost 100% say that they either strongly or somewhat agree that they contribute to their company's success. That's very, very high degree of engagement. They're proud to work in insurance. There's a clear link between what I do and my company's goals and objectives. Again, you're talking more than 4 out of 5, and sometimes 9 out of 10 workers agree, at least to some extent, with these statements. So again, that's a really positive statement about the degree of engagement your workforce has.
Excellent. And Michael, we're going to use these kinds of factors, particularly the aspects around contributing to my company's success and a clear link between my work and my company's goals, as really nice value add for when we're promoting careers in insurance to post-secondary and career changers through the Institute's Career Connections program. Those are really nice value add and really elements that millennials and young career professionals are looking for when they're considering companies to work for, industry sectors to look for. They want to be able to make a contribution that they can see and be excited about their work. So we were thrilled when those numbers around engagement came through the research, because that was really solid, excellent attributes that we'll be able to promote for sure. Okay, so then that is, we're close to time. We do have until 2:15 roughly. That was the bulk of the presentation that Michael and I wanted to give in terms of highlights and answer some key questions around the research. Again, if you missed it off the top, or if it now kind of seems to make sense, there are 2 reports. One is the demographics of the research of the industry. So that's looking at all of the factors that define our current workforce, looks at the perspective from where the industry has come in the last decade, because we have that research, and projects retirements for the next 10 years up to 2027. That's the demographics. It's available, that research is available as an executive summary, that's 32 pages. A full report for all you who are going to read it. It's 176 pages of in-depth analysis. You'll want to read that too. And if that's too much, there's an 8-page executive brief that uses infographics to distill some of the messaging. All of those are available on the website right now, so you can download those. And then the other, as we said, that provides the future forward perspective on what we think are going to be the implications for technology and the emerging issues coming forward. And so there's a section on not only the technological implications around workforce, but there's commentary around what blockchain might do for the workforce, for the industry and its workforce, how we anticipate the increase in cyber risk and cyber product and services will likely increase the workforce and specialists in cyber. So you'll want to look to the changing workforce to look for aspects like that about how all of these emerging issues are likely to impact the industry. Couple more slides, but if you do have questions, you can start typing away if you like. We do have a couple of questions on the board right now that I will address in just a second. What we wanted to do is to present this webinar as the highlights, but what we are hoping is that many of you and more within the industry will be interested in really delving into the data and really learning more about all of the research. And so we have a 12-city tour happening. Michael and I are coming across the country. We start in Vancouver on October 3rd. Most of them are 3-hour seminars. A couple of them, Regina and Hamilton and London, are lunch and learn styles with just me, but hopefully that'll be okay. And then the Toronto workshop is a full-day talent summit where we're going to not only deal in the demographics, but then we're actually going to work through with subject matter experts how we might be able to address some of these gaps and the big themes that are coming out of the research. So we're going to get a specialist who's going to help figure out what we do around some of the impact of retirements and how we address those leadership and management gaps. We have a specialist, Michael Burt, from the Canadian Centre for Diversity and Inclusion, who's going to come and help talk to us about what we can do more in terms of diversity, inclusion, and creating a welcoming culture within the organizations. And then because we've talked so much about not only the need to replace our retiring IT workers, bring in new skills around data and digital within our IT departments, but also recognizing that we as an industry are competing with all other industries for the same type of skill sets now that everybody's trying to do the Amazon effect. We have a tech talent panel coming together that's going to help us understand how we can attract that talent and how we can make the industry attractive to that talent. So a full day plan for Toronto, hopefully on November 19th, many of you can join us because we do think that it is important to not only address the gaps, but now figure out now what do we do about that, okay? So that's a little bit of what's coming next, which is great. And so now we're opening it up to questions, and I suggest you start typing, and look, quite a few are typing, this is great. Okay, so we have a question on, there is significant research on future of organizations and the use of gig workers, contract workers in the future. The thought is that there will be small core organizations, and majority of workers will be these gig type workers due to their specialized skills. So the question is, it seems to align with where you mentioned there is a lack of skills. Have you looked at the future trends as they fit with this? And so Cindy's asking that, and Michael, we did do, there's quite a bit in the reports around the contingent worker.
Yes, that was one of the additions to the current version of the work. We did ask about contingent workers. If one of the slides we had in there actually showed the share of the workforce that currently is contingent, and also asking about what shares was in terms of recruiting activity was going on. We were actually a little surprised in the census data when we asked about it. We thought contingent workers would primarily be in areas like, for example, people going in and doing assessments when there's a disaster in a community. So you bring in kind of a contingent workforce to handle those high levels of workloads. But most of the contingent workers, at least in the data that we have in the industry right now, are actually in IT, which was a bit of a surprise. But we do expect that it will be an issue for the industry going forward in terms of a way for the industry to address ups and downs or peaks and valleys in terms of workload, and also potentially as a way to allow workers who are retired or semi-retired to stay actively engaged.
We also think that the 92% full-time employment in the industry, so that 92% of the roles in the industry are full-time, may be a selling point to those who are not interested in the gig type economy. So it may work in our favor that way as well. So we have another question. Let's see. Good job. Was there any data gathered on how the industry is doing regarding pay equity, particularly interesting given women are now making up the majority of the industry professionals?
We didn't specifically dive into pay equity. We to be honest, we could at least do basic analysis on it, because in the employee survey we didn't ask specifically the dollar value of what they earned, but we did ask about pay ranges. So we could, in theory, have a look at how women and men with equivalent levels of experience and education and in a particular role compare in terms of pay. But that is not something that we delved into in the existing research, but it's something if ISC is interested in, if the Insurance Institute's interested in us exploring, we could potentially do with the data.
Just in context, the research has never been a compensation survey. As Michael said, we do ask salary range and then satisfaction with that, just to gauge as a factor in how they're feeling, how employees are feeling about working in the industry. And there is some indication of uptick in salaries over the decades that we've asked that question. So we've got some of that, but it isn't, the research has never been intended to be a compensation survey. Okay. We get that asked quite a bit. Do we have that kind of data? But it's never been the intention. Was there any insights in respect to how technology was going to impact the size of the workforce as compared to the P&C industry? So we get that question, or that was anticipated. There is lots of speculation that the headcount in the industry will come down due to technology, but the research and the reports make an emphatic statement to the contrary, right, Michael?
Right. So I think the pace of growth in headcounts will probably be slower going forward than it's been in the past, but a clear majority, 70% of executives in the industry, for example, thought that the industry would see more headcounts going forward than it has right now. So there will likely be changes in terms of the skills. So you may see less demand for certain types of roles. For example, we talked about personal underwriting being potentially automated as an example, but that would likely be offset by increased demand for other types of skills. The other thing, just as an aside, I'll point out is I actually found it quite amusing that pretty much all of the executives who responded to the survey thought they would grow more quickly than the industry as a whole. So, so everyone thinks the industry is going to grow, but they're going to grow even more quickly. So.
Okay. Good question. Any data on how automotive technological changes, example, autonomous connected vehicles, will impact industry skills and workforce?
Sorry, may have to get back to you on that one. But we did ask about specific technologies in the executive survey to try and get a sense of which ones were more likely to have an impact on the industry skills and workforce. And if I remember correctly, off the top of my head, it was big data was the one that was kind of highlighted as one of the bigger factors. Yeah. I'm trying to remember right now what the autonomous vehicles rankings were, but we do touch on that, I guess is what I'm trying to say. But I just can't remember off the top of my head what the results were for that from the executive survey.
Yeah, it was included in the mix of emerging issues that they could rank, but the big data and analytics was number one, artificial intelligence and machine learning was number two, digital engagement of customers was three. And right. then protecting against cyber threats was four.
Right. So thank you, Margaret. Yeah, so my memory's not completely faulty, but yeah, we did ask about it, but it was not ranked as the highest importance issue. So.
Over the next 5 years, that was right. The question.
Yes.
Yeah. And because cyber was ranked number 4, there is context in the Emerging Issues Research Report around the anticipated impact of cyber on increasing workforce and skill sets in order to understand and develop products and services around cyber risks that are naturally expected to increase. Question, does the data break out results by size of organization at all, large insurer versus medium versus small? So, and there was a previous question about were brokers or small or medium-sized brokerages included in the data. So the organizational representation in the data is good and solid in terms of all types of organizations represented. So small, medium, large organizations are included. Some of the data and some of the questions are assessed based on a organization perspective, particularly if there are surprising differences between types of organizations. And we did see, Michael did present, the top 3 occupations and top 3 in-demand skills based on types of organizations. So there is that kind of discussion within the research. And then one of the other things that will happen come November is that Michael and I and the conference board are working on providing a dashboard or an access point for others, such as yourself, to be able to access the data. And one of the key points of filtering the data will be by organization type. So all that to say is there is so much data that you may not find all the answers to all of your organizational type distinctions within the report, but there will be an access point to actually cut the data by organization come November when we launch the dashboard. We might have one more minute for a question. With the changing workforce dynamics, for example, the skill set, experience, and education, I think compensation package is extreme to attract the right talents in the industry. We are connecting with IT and financial industry. Please include this data in future sessions. Okay. Thanks, Cami. Okay. We are at our 2:15 time frame. I hope that you have found this session to be interesting and that we have provided some answers that you might have been curious about, but also perhaps made you a little bit more curious about more data that are in the findings. And hopefully you'll join us for one of those seminars, because we'll do a deeper dive into the data, have more time for questions and engagement, and be able to answer more questions at that time. Hope this was helpful. Have a great day. Thanks all.
Thank you, everyone.